Hi there, it's Dean Odell with 7 Gables Real Estate in the Odell Group. Today is September 22nd. It's time for another Tustin Talks, and this market is changing. So let's get to the charts and discuss this now.
We currently have 3,638 homes on the market, and that is the lowest level since June. Inventory is down 2% since our last report, continuing its drop since peaking at the start of August. Last month, rates dropped to 5%, but they have climbed from 6 to 6.42 so far in September. The higher rates are lessening home affordability, leading to a drop in the demand, which we're going to get into next. So let's look first at where we were last year at this time. There were 2,289 homes on the market. That was 37% lower from where we are today. While we are up from last year, we're still down from our 3-year average prior to 2020, which was 6,520 homes. Now, why do we keep talking about prior to 2020? That was before we had to quarantine, okay? So there were a lot more choices back then. Between rising rates and the fact that fewer homeowners tend to list in autumn market, we can anticipate inventory is slowly going to continue to drop until the end of the year. So now we're looking at our demand chart. We had 1,756 homes go into escrow over the past 30 days. That's down 4% from our last report, and it's the largest drop since the start of July. High mortgage rates are drastically impacting demand, and they are projected to remain above 6% for the rest of the year. Last year, our demand was 2,623 homes, and that is 49% higher than where we are now. Prior to 2020, the 3-year average was 2,363, which is 35% higher than our current demand. And again, the reason we keep talking about prior to 2020 is that's when things were more normal. 2020 and 2021 were abnormal years, and we're just throwing out that data because that data made no sense. Okay, so what we're seeing with demand is that it's dropping faster than supply, and it's impacting the expected marketing time, which is our next chart. Currently, our days on the market for Orange County is at 62 days, just slightly up from 61 days on our last report, which is the lowest level since the end of June. This means that we are in a slight seller's market where sellers get to call a few more of the shots, but there are far fewer multiple offer situations, and home values are not appreciating much at all. Properly pricing a home is crucial right now. Last year, the expected marketing time was 26 days. This was when it felt like homes were selling as quickly as they were being put on the market, similar to the beginning of this year. The 3-year average prior to 2020 was at 84 days, which was also a slight seller's market because if you remember, seller's markets go up to 90 days. But it was still slower back then than where we are today. It's important to remember that this is data for all the homes combined in all price ranges. But when you break it down by price range, you're actually going to see there's 5 different types of markets happening at one time. So let's look at that data. Okay, I'm not going to spend too much time talking about what I normally call my favorite chart, and it still is my favorite chart, but let's look at it all together because it really tells the story. Basically, anything up to 1.25 million is still considered a hot seller's market. Between 1.25 and 1.5, it's a slight seller's market. The $2 to $4 million range is a balanced market, and the $4 to $8 million range is a slight buyer's market, and anything above $8 million is a deep buyer's market. Our broader expected marketing time shows us as being in a slight seller's market, but it really varies by the price range. If you're interested in seeing what kind of market your home falls under, take a minute to pause and look over this chart. Next, we're going to continue to our last chart, which is the Tustin data chart, which you're only going to find right here on Tustin Talks. Okay, every 4 weeks, we show you the statistics for the Tustin Micromarkets of 92705, 92780, and the 92782 zip codes. We're not going to spend a lot of time talking about numbers on this chart this week because the data came late, as you might recall from our last Tustin Talks. We've been waiting on this data, but these are August numbers and the market's changing quickly, so it's becoming less relevant. We still want to share these August stats with you versus last year for anyone who's interested. So take a minute to pause and check it out if you do, and then we will move on to what all of this Orange County data means and my advice for buyers and sellers. Okay, so what does all that data mean that we get to summarize now here at the end? Well, let me talk about what the impact of interest rates are doing out there. You can't have rates go from 3.5% up to almost 6.5% and not have an impact. It's impacting the higher price ranges more than it's impacting the lower price ranges, because people who want houses, they're just having to rotate down to a lower price range, which that's not fun either, right? You get less for your money, but that's what's really happening. And if you look at some of these numbers, and let me go over them with you, we had interest rates start the year actually at about 3.25%, okay? They moved up to 4% by the end of February. They climbed to 4.75% at the end of March, over 5% in April, and reached 5.5% by the start of May. Now, after the inflation readings in June, rates soared to 6.25. Then they simmered down. They went back between 5 and 6 in July and August. And now here we are in September, and they've soared again up to 6.42% today. So that is a big difference. And just to show you what kind of difference that is, today an $800,000 mortgage at 6.42% would give you a principal and interest payment of $5,015 compared to $3,819 at 4% and $3,592 at 3.5%, or $3,373 at 3%. So look at what has happened to the average person's payment. In addition to that, they got to pay higher property taxes than a year or two ago because prices are still higher than they were then. Okay, so you would think with numbers like that, the market would be absolutely imploding, but yet our data still shows us that it's a slight seller's market. I mean, it's crazy, right? Well, what's going on? Well, the other thing that's happened is over the last 2 years, we are missing almost 7,500 homes from the market for buyers to choose from. So can you imagine if those homes would have came on the market and even half of them sold? Right now, we're seeing about 1 out of every 3 homes sell. That is basically what's going on. So the inventory will slowly rise if the demand stays at this level once we get past the fourth quarter of this year. But this is right where we see the market start to slow down and go into a decline as far as listings go anyway. So expect that. Demand is the lowest it's been since the Great Recession right now, but what's keeping everything in check is the low inventory. So what does this mean for you buyers? Well, it means less competition, that's for sure. And if you can find the right deal and you're comfortable, then go ahead and buy it. Don't try to time the market strictly on price. The average person stays in their house 20 years. Also realize that if we have a recession, we come out of a recession, rates will drop, you'll be able to refinance, okay? But if you don't really have a need for a house, I can understand waiting right now. I would certainly probably wait if I didn't have a need for a house. But if you have a need for a house and it's a long-term thing for you, then it's hard to time the market exactly, right? Sellers, I'm telling you right now, been doing this a long time. This market, there's no reason for it to go up in price anymore. So if you guys have been holding out for the top of the market price-wise, it may be in your rearview mirror at this point. And where it's going to go from here is hard to say. It's going to depend on supply and demand. It's going to depend on interest rates. But I can tell you, the buyers are past wanting to pay more for houses. That's for darn sure. So what do we see this week in our business? Well, we've got a few new listings coming along the way. We've had maybe 5 different buyers that offered on listings of ours that have changed their mind as soon as they saw the market drop by 1,000 points, the stock market, right? That affects people. So there's a lot of stuff going on here, but even so, we still managed to put a $4 million home in escrow, close a $4 million sale this week. Now, we don't sell just $4 million homes, don't get me wrong. We have another listing that's coming up this week at $1,225,000. You want to talk about demand? We already have 15 showings booked for that house. So there's buyers out there, but the reason they're onto that house is because they know it's fairly priced. People know what fairly priced property is, and we'll be able to report, I'm pretty sure by next week, that house is in escrow, or next Tustin Talks anyway. So sellers, you got to be reasonable. You got to have that house looking good, and you got to have a good price. The market, the crazy market, is gone, okay? We're going back to normal. So if you want great advice, call the Odell Group. We'll help you whether you're a buyer, whether you're a seller. We understand this market. We know exactly what's going on, and we're going to keep you guys updated every 2 weeks. All right? So thanks again for tuning in to Tustin Talks, and we'll see you next time.